Welcome to Equal Ground Headlines. I am Samuel B. Williams, bringing you balanced coverage on our top stories of the day. If you appreciate journalism that explains, not inflames, hit like and subscribe to Equal Ground Headlines. The trading day opened with a jolt of cautious optimism, and by the closing bell, that optimism had hardened into a full-fledged rally. A monthly inflation report landed lighter than forecasters expected, and Wall Street seized on the news that consumer prices rose just 0.2% in April, nudging the year-on-year rate down to 2.3%. Within minutes, algorithms spun into buy mode. The S&P 500 jumped nearly 0.75%, and by mid-afternoon the index was back in the black for 2025, erasing the losses that had piled up through a turbulent winter. Tech shares led the surge. The Nasdaq climbed 1.6%, while an AI-heavy sub-index clocked its best single-day move since February. Traders on the New York floor described a relief bid atmosphere. Less euphoria, more exhale, as bets on near-term Federal Reserve rate cuts crept higher. Bond yields drifted sideways, signaling investors still expect the central bank to wait for several confirming prints before trimming rates. Under the surface, the winners were familiar names. Nvidia, supermicrocomputer, Palantir, and a cluster of cloud hardware makers, all ripped higher, adding roughly $90 billion in combined market value. Energy and insurance lagged. United Health sank after yanking its earnings forecast, and crude-linked stocks slid on fresh signs of slowing global demand. Still, breadth leaned decisively positive. More than 3 stocks gained for every 2 that fell on the big board. Strategists at Goldman Sachs cautioned clients not to chase green bars in a vacuum, warning that tariff headlines and sticky shelter costs could put the next CPI print right back above 2.5. Yet even the skeptics acknowledged that Tuesday's figures pushed the feared stagflation scenario farther to the sidelines. Beyond the tickers, executives were busy making long-term bets on domestic capacity. Carrier Global, the century-old maker of HVAC systems, once famous for negotiating state tax breaks to keep jobs in Indiana, unveiled a fresh $1 billion blueprint to expand U.S. manufacturing over the next 5 years. The package includes retrofitting several existing plants, constructing a new facility tailored for high-efficiency heat pump components and battery assemblies, and hiring 4,000 additional workers. Carrier will also fund training programs for 100,000 installers and service technicians nationwide. Management framed the move as a competitive response to soaring demand for electrified heating, as well as a hedge against fragile supply chains that snapped during the pandemic. Analysts noted the announcement dovetails with federal incentives for clean tech investments and with tariffs that favor American-made climate solutions. Shares of Carrier closed modestly higher, though some investors fretted about margin pressure from rapid capacity scaling. Labor groups praised the jobs pledge, but warned that prior Carrier expansions have relied on temporary wage tiers. Local officials in 3 Midwestern states are already jockeying to land the new plant, dangling infrastructure grants and workforce credits. Environmental advocates call the focus on heat pumps the clearest sign yet that decarbonizing buildings is no longer niche. Skeptics countered that heat pump adoption still faces sticker shock among lower-income households, and that production booms can overshoot demand if subsidy rules change after an election. Carrier's leadership brushed off the critique, pointing to record backlogs and a technology roadmap that links next-gen compressors with grid interactive batteries, allowing homeowners to store cheap off-peak power and slash utility bills. If Carrier is thinking in billions, Nvidia is thinking in the tens of billions, and it is thinking global. As part of a headline-grabbing slate of deals announced during President Trump's Gulf tour, Nvidia agreed to ship an initial tranche of 18,000 cutting-edge AI accelerators to Humain, a startup owned by Saudi Arabia's public investment fund. The chips will seed a network of AI factories, expected to draw as much as 500 megawatts of power, and churn through Arabic language data to train large models tailored for the Middle East. Officials in Riyadh hailed the partnership as a leap toward economic diversification, while Nvidia executives stressed that all exports will comply with revised U.S. licensing rules issued last night. Those rules resigned Biden-era limits that kept the most advanced silicon out of the region. A move the Commerce Department says will encourage allies to buy American, rather than turn to Chinese suppliers. Investors loved it. Nvidia stock added more than 5%, pushing the company's market cap to the $3 trillion threshold and inflating CEO Jensen Huang's paper wealth to roughly $120 billion. Yet the applause was not universal. National security hawks argued that funneling ultra-powerful GPS into authoritarian states could accelerate regional arms races in autonomous weapons and surveillance. Commerce officials replied that keeping tight technical safeguards and end-use audits is easier when sales flow through U.S. companies rather than gray market resellers. Meanwhile, U.S. cloud providers quietly cheered the relaxation, betting that Saudi-financed data centers will turn to Amazon, Google, or Microsoft for additional compute once local capacity hits the wall. Chip design rivals AMD and Intel, shut out of this particular deal, are lobbying for their own approvals under the new guidelines. The three narratives, cooling inflation, domestic reindustrialization, and aggressive overseas chip diplomacy, may look separate, but they intertwine. A softer CPI print eases pressure on the Federal Reserve, which in turn keeps corporate borrowing costs manageable for capital-intensive projects like Carrier's new assembly lines. Stronger domestic output fits a White House storyline that American workers gain when trade rules get tougher, even as allies abroad line up to buy U.S. technology. And India's blockbuster export underscores how deeply Wall Street's rally hinges on AI momentum, not just on macro data. If demand for advanced processors stays white-hot, equity bulls argue that profit growth can continue even in a choppy economy. Skeptics retort that a single-sector melt-up leaves markets exposed. If AI investment cools or regulators pounce. For now, traders head into midweek with a burst of confidence. Inflation has cooled for 1 month. Carrier is writing 9-0 checks to rebuild at home, and Nvidia is turning Saudi desert plans into silicon reality. Tomorrow brings fresh producer price data, an oil inventory report, and the first wave of retail earnings calls. Any of them could scramble sentiment again. Until then, keep an eye on bond yields for the market's true pulse. And remember that a single data point does not a trend make. Thanks for listening and stay informed.